We're joined by Michael Levas, founder of the Olympian investment group of companies. I want to thank you for coming on to the show. And the reaction we got from Wall Street, the reaction we're getting from investors on this Federal Reserve issue from Ben Bernanke, what did he say that was new?
I don't believe he said anything that was new. In fact, some of the members of the board stressed that they will continue to look at the information that they get on a daily, weekly, and a monthly basis. And I think that's really what they're most concerned with.
Is it me? But I'm confused because we get bad news in the economy, and the markets seem to like that. Then we get some good news out of the economy, and people then worry because there's good news, then the Fed can then stop this this painkiller effect onto the markets. And explain for our international viewers, I guess, why a lot of investors are confused.
Well, I think that, sometimes they're looking for certain things. They hear from various market participants, commentators, pundits, et cetera, that the Fed will be doing something. And when they don't do that, then there's a reaction. And because there's this built-up pretense that they think, okay, they're going to stop, so we have to think this way. And if they don't do that, then the market sells off. So.
Let me ask you a few questions, very short, quick answers. We've got a bunch of them. First, let's start with interest rates. Are they okay where they're at now, or are they too low? I
mean, obviously, they've been too low for a long time, and they need to move up. And they will, but it's going to be a very gradual process.
Do we worry about inflation in America?
I mean, certainly. That's always a concern, without question.
Housing prices have been moving quite nicely. What's the problem?
I mean, I don't think there's a real problem. The housing has been moving up. There's a lot of cash buyers out there. There's a lot of cash buyers, hedge funds, private equity firms. So obviously this is having an impact on that housing sector.
Is Europe, is it a last year story? Do we still need to worry about Europe?
I think we do. I mean, you can see today from the headlines with Greece and with what they need.
Well, Germany said, hey, Greece might need more money. I don't think it's a big surprise to a lot of people, but that caused markets to get nervous again.
Yeah, I don't believe, Phil, I don't believe that it's over. I think there's some serious underlying factors that still need to concern us a great deal.
China?
I mean, the economy there is I think it's okay. I mean, obviously there's certain pockets that need to be, closely looked at, but I still think they're okay.
Do you think that the problems in Europe, let's focus on that, is that going to cause the Fed to say, hey, wait a minute, let's not get too carried away about our own economy here in the U.S. It might be looking a little bit better, but we're still really concerned about Europe, so that they may keep rates low for an even extended period of time?
That could very well be. They will definitely be concerned with what goes on in Europe because obviously it impacts the United States. So they will definitely look at it.
And then as for Ben Bernanke, there's going to be a change of leadership at some point. What do the markets really want?
I think they want somebody who's going to continue what the chairman has done.
So they like Ben Bernanke.
I think
is that a fair statement?
Yes, absolutely. I think a lot of the market participants like Bernanke because without him, we wouldn't have this. Exactly.
But this brings us to my other question is, we were having this discussion a few days ago, and just a group of kind of regular folks, and we talked about explaining what this whole stimulus was because we've forgotten about it. It's a couple $1 trillion. It's the injection of capital into the money, the reduction of interest rates to zero, and the buying of bonds. I mean, essentially, that's part of the whole stimulus package. Here's the problem. It's essentially sort of like you're in the hospital bed and you're on these painkillers, and it's making it numb, all the problems in the world. We've got unemployment in the U.S. we're still trying to solve. How long are we going to be on these painkillers for?
Well, I wouldn't call it
Or how long should we be on it for?
They're probably going to continue through the end of the year. And then I think in the first quarter of next year, they will look at it, depending, of course, who becomes Fed chairman as well. Now, that will play a very, very a serious part in this whole thing. So we'll have to really, look at that.
The final question,
sure.
If they were to raise interest rates, the Fed's already said they're going to do it sometime in the middle of next year. What's the big deal if they start doing it little by little?
There's no real big deal. I mean, there's a lot of people who are so concerned that if they stop the bond buying, that it's going to affect the market. It won't. We need it. It's going to happen, and they're going to probably do it gradually, 25, 50 bips, and I think that's what we're going to see for sure.
Okay, Michael, thank you very much for your insight. Great to have you on Biz Asia America.